Friday, February 16th, 2024, Maneco 64, home of alternative economics and contrarian views. We're going to look at why they don't want you saving. And by saving, I don't mean investing. I mean stacking real money, i.e. gold and silver. It's all to do with the fiat currency system, of course. But before I do, I'd like to make a couple of announcements, and then we're going to look at some headlines and some news that I think are pertinent or important. So the first announcement is that I try to answer as many of your questions in the comment section, but it becomes tough to answer all of them. And a lot of times you might want to ask a question that is more private. So the way we can go around that is for you to join my Patreon. And all the details are below in the description. And it's for as little as $1 a month. And I use Patreon just for that, for the messaging, private messaging. And I'll try to answer your question as best as possible. So yeah, it's not even the price of a coffee. You can have access to what I think, and no financial advice, just giving you my opinion. So yeah, check out Patreon. The other thing I like to say is that if you enjoy my videos, make sure you subscribe to the channel. Make sure you hit the little notification bell as well, and hit the like button too. And I'd like to thank all of you again for your interest in my channel. When I started this out in late 2015, I didn't expect to have so many followers and so many views. Didn't expect that people would want to listen to me as you do. And I promise to keep trying to give you good content and valuable information. So let's quickly look at some of these pertinent headlines that I think are important. The first one is about JP Morgan Asset Management, and it says JP Morgan Asset Management exits Climate Action 100 Plus. Well, that's the whole ESG agenda, which is environment, social, and governance, or sustainability and governance. It's a World Economic Forum Agenda 2030 narrative. And I think it's great news because a lot of US states that invest for their workers, public pensions, they don't want to know about ESG. And I think this is great news because it's a chink in the armor of this climate change agenda. And for JP Morgan to exit this, it is pretty important, I think, even though they say they're going to keep looking at the environment and ESG. But this is significant in my opinion. The other one is to do with the great taking a little bit. Some of you have heard of the great taking. I made a video last September looking at the book, The Great Taking. I'm going to put it up in the card so you can listen to it. But it's about private property. There's a story came out earlier this week in the Daily Mail. Our council tried to force us to sell our £200,000 home to make room for asylum seekers. Elderly couples horror after strongly worded letter lands on their doorstep. Yes, they weren't successful, the council, but it was very worrying for this elderly couple to get a letter like this. Very not provocative, but a very aggressive letter telling them that, you know, your house is empty and it's dilapidated, and it was not the truth. So some of you might say it was just a mistake, but just the fact that they thought of doing that is worrying. And someone contacted me yesterday as well to let me know that in Ireland, for example, they've amended their constitution. If you go to the Irish Constitution, Article 43, Section 2. So let's read the whole Article 43, though. It says, the state acknowledges that man, in virtue of his rational being, has the natural right antecedent to positive law to the private ownership of external goods. The state accordingly guarantees to pass no law attempting to abolish the right of private ownership or general right to transfer, bequeath, and inherit property. So it looks really good, that part, but I think this referendum went through. They voted to make housing like a human right. So if you go further down in Article 43 here, Section 2, it says, the state recognizes, however, that the exercise of the rights mentioned in the foregoing provisions of this article ought, in civil society, to be regulated by the principles of social justice. Number 2, the state accordingly may, as occasion requires, delimit by law the exercise of the said rights with a view to reconciling their exercise with the exigencies of the common good. So the view here is that they could use this article in the Irish Constitution to basically take your property. They'll probably compensate you, but it's still not good. And give it to all the people that are going into Ireland right now, the illegal migrants. And Ireland has had a huge problem with that. So just wanted to put that out there. The other thing that I saw is that the Fed's balance sheet has pretty much bottomed. It's even gone up a little bit since the end of January, from 7.63 trillion to 7.633 trillion. It might not mean much. It might go down this week, and the numbers for this week is published Thursday night next week, but we'll have to see. So it looks like the Fed is easing off on the tightening. Is it any wonder that the stock markets have kept going up? So let's get back to saving. And just like with inflation, I think a lot of terms have been corrupted. As you all know, hopefully by now, inflation is not the CPI. Inflation is when you inflate the currency. In the old days, they used to do that by debasing the metal in the gold and silver coins. Nowadays, they just do it by printing money out of thin air. I mean, the head of the Reserve Bank of New Zealand, Mr. Orr, said that the other day. We print money, so it's a great business model, and nobody knows, or nobody understands it, or they think it's not real. And everyone around him laughed as if it was a joke. So the money is a joke, really, and that's how they do it. That's what inflation is. The rising prices, of course, are a consequence of that, because the law of supply and demand. The more funny currency that's created by people like Mr. Orr, the less value it becomes against real goods and services that take effort, not fraud, to create. So it's the same thing with saving. People associate saving now with investing in a pension, or in the stock market, or in cryptocurrencies, but that's investing or speculating, and they've made us believe that saving is putting your money in the stock market or bond market. But, you know, if you look at the definition here, and I'm going to reference my old Merriam-Webster dictionary from the 70s. It used to be my father's. But what does it say here? To save. To put aside as a store or reserve. So, yes, is to put aside money for a rainy day or for when you get older. And that's the other thing. I think there's an industry around retirement and stuff like that. And why? Well, because they want you to keep putting money in the stock market. Yes, so the likes of BlackRock, Vanguard, Fidelity, and others can grow into massive companies, $1 trillion in assets. Those assets are not theirs; they're yours. When you put when you save your money into a retirement fund or into the stock market or a fund, whatever, that's why they're getting so big, and that's why they're so powerful on the back of you. I'm not even talking about the fees that they take from you every year. It's one of the reasons I stopped putting my money into a private pension, and I actually withdrew after I was 55. The fees were exorbitant. You know, it creates this industry of pension fund managers, which in my opinion are not necessary. And it takes people's focus away from investing in themselves and having their own businesses. Of course, they make it very difficult for us to save. And why is that? Well, because of inflation. And they hate, of course, when prices don't go up, what they call deflation. They want to rip you off by 2% every year. That's their inflation or CPI target, right? But if you look at that, you know, 2% inflation or CPI over 40 years, the value of your money halves. And of course, they're not really doing just 2%. They're doing a lot more because they tinker a lot with the statistics. So you might say, well, but the stock market is doing really well. Yes, that's true. But why should you invest in a big corporation that's doing everything really just to maximize executives' pay packet and share options, and also the intermediaries? Why are you feeding the Black Rocks and Larry Finks of the world with your savings? So the other reason is that under a fiat currency system, as we've talked about many times, you need the debt to keep growing. So they don't want you to save. They always want you to save in the real sense by putting aside money. And by money, I mean real silver and real gold. They don't want you to do that. And is it any wonder that stackers are so frustrated about what happens to the price of gold and silver? Because they want to discourage people from doing that. If they allow gold and silver to trade freely, I venture to say that a lot less people would save into the stock market and into the pensions and into these funds. And that's why, you know, they fudge the numbers and they make it really hard for you to save fiat currency, of course, because it's losing half of its value over 40 years. Can you imagine if the money was sound? And we've had that. You might say, well, we've never had that, but we did up until 1971 in the US. You could argue that a little bit. But look at the UK or England during the 19th century when the country went back on the gold standard after the Napoleonic Wars. And you can check that yourself in the Bank of England inflation calculator. You just have to Google that and it'll come up. And you can do the period from around 1821 to 1914. And the average inflation, or CPI, and they do use that as inflation, but be as it may, the average CPI for that period of almost 100 years per annum was minus 0.1. And why is that? Well, because the pound was as good as gold. You know, the silver coinage was silver coinage. They didn't debase it. So what it meant, for example, let's say someone started working at age 20 and they worked for 40 years very hard. They started a family, of course, and then the children got married and started their own families. And by the time they're 60, for example, they've saved enough silver and gold, right? Let's say they were able to put away a quarter of their income every month for 40 years away. And of course, there was income tax after the Napoleonic Wars, but I think it was mostly for very wealthy individuals. In the US, you didn't even have income tax until 1913. So let's say they put a quarter of their income away for 40 years. And let's say they expected to live another 10 years. And they weren't retired. They might have had a small business or kept doing things. But that money that they saved for 40 years, for the next 10 years would act almost like, you know, they had enough money to live for 10 years without even working, because they put a quarter over 40 years, and now over 10 years they'll have the whole money. And the money would buy the same amount that it would when they started working. And with industrial development and progress, the standard of living also got a lot better. So it was great that you could do that. And you didn't need to speculate. And the other thing is, well, no one was making anything off your silver or gold because you're holding it. There's no fees. So they don't want that anymore. And that was real saving for a rainy day, or saving for later in life when you couldn't work as much. And they tell us now, oh, the state will look after you with the state pension, Social Security, I think it's called in the US. And, you know, we'll make sure that you'll be okay when you get older. But the process of inflation has basically done the opposite of what gold and silver would have done in the 19th century, of still having value for you to, you know, slow down in your later life. I don't even say retire, but just slow down. And of course, all the costs you had of keeping a family and sending them to school, feeding them, that would have been gone, because your children would have grown up and they would have been able to look after themselves. So you would have been really well off. But nowadays, you know, the way things are going, we hear of a lot of people having to work until they're 80. So it hasn't really worked. And but they don't want you to save, and that's why interest rates, when they say interest, we have real rates now, where we have rates above the rate of inflation. That's rubbish, because if they did, people would be a lot better off. We wouldn't be in a recession. So that's why they don't want you to save. The other reason is, if you keep putting your earnings away in real money, you're not going to put it in the system. The other thing as well, with taxes and inflation, you're never able to save that much. So you have to keep borrowing, especially now, and that keeps their system going as well. If people start saving too much, it's a disaster for them. And that's why they want this 2% CPI target. So yeah, when was the last time you saw an advert or something about saving, right? Save for a rainy day. No, it's all about spending and borrowing and taking on a mortgage and all of that. So that's my rant for the day. And what do I mean by they don't want you to say? Well, the people in charge of the system, the bankers, the politicians, how can I say, the supposed academia as well out there. So let's quickly look at the markets then. It's 8:34 a.m. London time. We had some weak data yesterday, and the metals rebounded. Gold right now is unchanged around 2005. The high's been 2007, the low 2002. Silver is trading just around $23. It's up 6 cents. High's been 23.03 and the low has been 87. The Dow futures is down 17. NASDAQ is up 95 points. The S&P that dropped below 5,000 earlier this week. It's now back above 5,000. It's up 7.5 points. What about the currencies? Sterling is down about 0.2%, 125.80. The euro is down slightly at 107.66. The dollar is up 0.25% versus the yen at 150.25. The dollar is unchanged versus the yuan, 722. I think this week is very quiet in China because of their New Year's. I think next week they're going to come back online, the Chinese. To the other currencies, Aussie dollar is unchanged, 65.22. Dollar is up 1/10 versus the loonie, 134.77. And the Kiwi dollar is unchanged at 61.01. To the commodities, WTI crude is down 0.2%, 77.50. Brent as well is down about 1/4, 82.21. Platinum trading around 900, so virtually unchanged. And high-grade copper, that's up 0.75% at 380. What about the Treasury market? The 10-year yield is up 3 basis points at 427. Keep an eye on 433. That's not a good sign if it goes above that level for everything. In the UK, we're seeing yields go back up as well. We got the 2-year yield up about 6 basis points, 463. The 5-year is at 411, up 4 basis points. So with that, I'm going to wish you all a very good day and a very good weekend. Take care. Bye.